and hello everybody. Welcome back for another episode, If Not Now Wen. In today's show, I am really excited to welcome Eric Engineer to join us as a guest on our show. Eric is a partner of S3 Ventures. He supports portfolio company as a board member and advisor for the strategic growth. He was previously CEO at Invodo, an S3 venture portfolio company, which was acquired by CoCreativ in early 2018. Prior to Invodo, Eric was a partner at Sevin Rosen Funds in Dallas, where he helped lead the firm's investment in Invodo. Eric also worked at Microsoft, where he held a variety of roles in product management, product planning, and enterprise sales across several business units. Eric began his career as a sales engineer at Trilogy Software in Austin, Texas. Eric held an MBA from Harvard Business School and a master's and bachelor degree at computer science from Rice University. With that, everybody, please join me to welcome Eric to the show. Well, thank you so much, Eric, for joining us today. I'm so excited to have you.
Glad to be here.
Let's dive in. So how does all the magic begin for you?
How does magic begin for me?
Yeah.
Oh, well, I think what is magical for me and why I love my job is just seeing people create new things. I've always enjoyed seeing how, something is started and the building process. And so every day when I meet entrepreneurs and they're telling me what they've accomplished starting from zero and then what they've built, that's magical. That's magic.
From zero to hero, right?
That's right, yeah.
Incredible. And Eric, I know you grew up in Houston. Tell us about how you grew up.
Yeah, well, my parents both were born in India, and they came to the United States actually independently and met here in the U.S. When they came here for school. And we landed, I was born and grew up first half of my life actually in Michigan.
Oh.
And then we moved to Houston when I was 12. And so consider Texas kind of my home. That's where my family is, both extended family as well, mostly in Houston. Like you said, I went to Rice University for undergrad, studied computer science, and actually moved out here to Austin during the dot-com bubble. My very first job out of school was a company called Trilogy Software, which was a fast-growing startup here in the area. Yep. And it's been fun to see kind of how Austin has changed over the last 20 years since then. But,
incredible.
But yeah, that was kind of my first exposure to Austin. I've lived all over the country since and moved back here just over 10 years ago.
Incredible.
Yeah.
What's it like grow up as a first generation in America?
I felt, never felt out of place really. I think that's just because of I think my parents were very thoughtful about things. It made it easier for me in some ways. It's funny, like even my name, they gave me an American name, which is, in some ways you kind of lose your culture when you do that. But at the same time, it was kind of made life easier for me. I didn't have to explain it.
Your last name is Engineer.
Yeah, my last name is Engineer too, but that last name comes from when the British were in India. But Eric. Is one. So that I think those kinds of things made it a little bit easier for me in some ways. But always just surrounded by really great community, family, friends. I always felt very supported. So I feel very lucky to have had a really kind of a childhood that allowed me to kind of be who I wanted to be and was supportive of that. And
what do you want to be when you were little?
Oh, when I was little, I always loved science. My mom was a doctor, so and my dad was an engineer, like typical Indian parents. So those were the two paths that were kind of most obvious. Yeah. But then when I grew up I was kind of in middle school and high school during the 90s, and then went to college during the dot-com excitement. And so computers and information technology were kind of front and center. I had computers since I was very young. I think I feel very lucky that I had that. My dad had brought a computer, probably, it was one of the very early, like 486 kind of, or actually might have been a 286 computer actually. So very early, kind of one of those IBM clones. And so learned a lot about computers as a young age, played around with them. And so it was always something I was doing, on AOL and whatever else at the time. But when I got to college, I just happened to actually take a computer science class because my roommate was taking one. I was pre-med and I didn't know what my major would be. And so I liked computer science. I took it and I was just something I really loved. I was, naturally, I guess, kind of comfortable with and good at. And so that became my major and then eventually became what I did professionally and dropped the idea of being a doctor.
You pick one of the two options.
Yeah, exactly. It was either take the MCAT or go do an internship. And so that was...
Brilliant.
Yeah, that was it. Yeah.
And how does that shift from a computer science degree to enterprise sales, right? That's your first role.
Yeah, my first job. Yeah, so I always knew that I was not the best programmer. Like I knew that, right? I wasn't one of the top programmers, but I loved technology and I enjoyed communicating with people, enjoyed working with teams. And so I always thought, okay, wait, business might be part of my background. Also, my dad had a lot of small businesses growing up and I worked in them. He had a travel agency. He had after he quit being an engineer. And when we moved to Texas, he started a travel agency. Then he had a Party City franchise that I worked in on the weekends. Wow. And so I was kind of exposed to a little bit of that as well and enjoyed that combination of business and technology. So even in undergrad, I took both as when I stopped doing pre-med, I did computer science and business. And so I always knew that I was going to be more at that intersection. And so even when my first job out of school at Trilogy was, I applied for a technical sales role. So where I was helping the sales team on the technology components of the sales process.
Yeah.
So it was very, very early age kind of thinking about
so
that.
Your dad really is a serious entrepreneur. He is a hustler.
Yeah, he was a small business owner and learned a lot. I would go to his travel agency after school sometimes and play around actually with the computer systems. They're very early. They were called Sabre systems for making reservations, and then actually even at the Party City, you kind of work with the computer systems for the inventory management and the cash registers, and you kind of get exposure to all of that kind of pretty early. But yeah, it was always fun watching him kind of build something again from scratch. And
do you always see yourself one day being a business owner in that aspect?
It's interesting. Like I think I'm a little. I have this natural curiosity for like new things, and so I can get kind of bored very easily with one thing. So for me, it's like if I'm doing the same thing every year, I would not enjoy that. Now I know with businesses they're growing, it's different, but that's why I kind of and I've run a business. I'll talk a little bit about my background there, but and that was a learning experience where every year was different. But what I really liked and why I've kind of settled on venture capital was the ability to work with a lot of different types of people and a lot of different new industries, new technologies. And that's just more fun for me generally.
Yeah. So let's, talk about you. And at the time you start with this business, intersect with engineer.
Yes.
And what's next for you at the time?
Right. So actually it's funny. I always tell people I've graduated into 2 recessions. So the first recession I graduated into was the dot-com bubble bursting. So as I was joining Trilogy, the bubble was bursting or deflating. And within a year, I was laid off. And so that was a very formative experience for me. It's something that I think was actually good for me at the time, but didn't feel like it
of course.
at that moment. But it had 2 benefits. One was I went back and lived with my parents, and that's when I got to be more serious with my then girlfriend, and then who's now my wife. so that was important.
Yeah.
And then secondly, it allowed me to kind of find my next job, which was I was very fortunate to be able to be part of the very first year of what was called the Marketing Leadership Recruit Program at Microsoft. It was kind of in the spirit of what Google had done with their Associate Product Manager program, which is still going on and very famous in terms of what it does. But basically the idea was Microsoft wanted to develop product managers in-house from college hires versus MBA hires or as an alternative to that. And so we were kind of the guinea pigs. We were a group of like 30 or 40 college hires that were all flown out and to live in Seattle and worked across the organization and had a lot of opportunity to do like learning, where they actually sent us to Kellogg for business school, kind of like a light version of business school, if you will, around marketing several times. And then we also did special projects with executives and along with their day jobs. So it was a very intensive kind of experience where with a great set of friends that I'm still very close friends with today, a great network across the country. but really kind of was very formative for me because it got me into product management, which I always tell people is a fantastic role if you're someone who wants to be a CEO one day or just really likes to kind of think about things kind of more from a general management, functional, multifunctional kind of point of view. Product management really does sit at the intersection of everything, and I feel very fortunate that because I got laid off, I landed up there.
Yeah, there's one door closed, another
exactly,
open.
another one opens.
Always open.
And I've unfortunately had to lay people off in my career as well, and I always kind of try to remind myself of that and try to remind them of that as well in that process because it's very hard, but it sometimes sets you free for bigger and greater things.
That's brilliant.
Yeah.
So what's next? Sounds like you were loving your role at Microsoft. You felt roll out sleeves, growing to this product manager.
I got to work on, actually I landed up being product manager for the developer tools for the very first mobile devices. So for older listeners, they'll remember the Pocket PC and the very first Windows mobile smartphones. This is when Microsoft still was hoping to kind of be a major force in the smartphone space, but they were very early on in what used to be called PDAs, personal. Oh my gosh, I'm even blanking on what that means again. But basically, these are portable devices and that mobile devices that didn't even have connectivity. So these were apps. I like to say before there were app stores, Wi-Fi, or GPS on any of these devices. So really early on, and trying to get developers to write apps for that. So these were all the tools that if you wanted to code up and write it and test it out on an emulator and then load it up onto a device and have it work, you could do that. So it was really a great experience because I was seeing the whole mobile revolution at the very beginnings, right? And I learned a lot in terms of, and I actually worked with a lot of startups because a lot of the people that were building apps in the early days were just hobbyist startups. And I was arming them basically with the tools that they needed to build new things and invent the future.
Wow.
And so I really enjoyed that part. But it also showed me how big companies like a Microsoft can really struggle to these shifts. Even though they see them coming and they know what they want to do and spend billions of dollars sometimes, they sometimes can't make it. And that today is always important because I think that's what creates room for startups and other things to do new things.
Yeah. So at the time you're in corporate, you are working with a bunch of amazing entrepreneurs in a way, creating this next technology. Do you at the moment have the idea to shift?
Well, I always knew I wanted to go to business school. So it was kind of at that age where it's like, okay, now's a good time to apply for business school. So I did that, and I was fortunate enough to get into Harvard. And I had my girlfriend at the time who we were like, okay, I probably need to get married now, as everyone around us was reminding me. And so we got married the summer before I went off to business school. So she was amazing because I basically took her from where she was comfortable with her family and friends in Texas, and we moved out to Boston or to Cambridge.
She go with you? That's amazing.
Yeah, she came with me. Yeah, newlywed wife. We headed out to a place where she didn't know anyone, and we just kind of started a new chapter together there.
Incredible. How was the 2 year?
It was great, but the one thing that she'll be the first to say was she wanted to move back to Texas as soon as possible. She liked the warmer weather and she knew people here. So one of the things we agreed to very early on was I tried to find an opportunity in Texas. The problem was I wanted to do venture capital, and I didn't really know if that was even a thing at the time. You have to kind of take yourself back. This is 2006 to 2008 time period, and so
it's really heartbreaking as well.
Well, it's hard to break into venture capital, but at that time it really was just Silicon Valley, not even San Francisco, just like the south of South Francisco, and Boston, New York, LA, all these other kind of Seattle, like these spots weren't really kind of known for venture capital in any way at the time. And so I said, well, I'll try my best. And so I looked in the alumni databases for the Rice University and for Harvard Business School. And I just did the filters of Texas venture capital. And the crazy thing was the same name was in both databases. A guy named John Jaggers, who was managing partner at Sevin Rosen Funds, which was a national firm, had been around 30 years, iconic firm, had investor in Compaq Computers, Electronic Arts, Lotus, Citrix, like all these amazing companies. And I I said, wow, I feel that's amazing. I need to
Stars align.
I just need to email him, hopefully, and he'll respond. And it was amazing because he responded to a cold email, invited me to come over when I was going to be back in Texas during the holiday, the Christmas break, to come in and just talk to him. And I did an interview and got a summer internship from that. And I was very lucky because they were thinking about raising their next fund and they were thinking a couple years ahead. And so
Oh my God.
it worked out, incredibly well.
That's like star aligned. For people who have not been business school, that's like less than...
Very, very lucky. Yeah. Because usually they say, in school they would tell us you can pick one or two of the three things between function, industry, and location. You can't get all three.
No.
And I really did get all three. So I feel very lucky. So we moved to Dallas because they had offices in Palo Alto and Dallas, and of course I wanted to be in the Texas office. So moved to Dallas with Richi, my wife, and we got started there. And then this is where I graduated into my second recession because this was 2008.
You graduated 2008?
Yeah, for business school.
Oh my God.
So as soon as I get to Sevin Rosen Funds, things are changing there. And obviously the financial crisis put a pause on all fundraising.
Yeah.
And then there were other kind of dynamics with the partnership where eventually led to a few years in where they decided rather than raise another fund that they were going to all retire because they had, all been very successful in the dot-com bubble and at the senior partnership level. So then I had to figure out what I was going to do next. I also knew that the other large kind of billion-dollar firm in Texas at the time was Austin Ventures, and I had friends in business school who were there, and they were kind of telling me, things may not look so rosy there either in terms of what was going on. And so I really thought venture capital in Texas as a career path was dead for me. Like I didn't really think that was something that I could pursue, and so I just kind of went to like plan B, which was, well, I really enjoy startups. I enjoy being, kind of in that environment. Why don't I join one of the startups that I was close to? So I joined a company called Invodo, which was a company that I had worked with. Actually, when I was an intern at Sevin Rosen, I had worked on the investment memo and met the entrepreneurs then. And by the time I joined, we already had invested in the seed round and the A. And that company was really in innovating at the intersection of e-commerce and video. Really, you have to take yourself back to when Google had just bought YouTube, right? So early days of video on the internet, and we believed that video would change the way people shop online. That every product would have a video that shows the feature benefits, demonstrates it. We take that for granted today. That was not the case back then at all. People just, had photographs of anything, and so. We built a software platform that integrated into e-commerce systems that allowed people to host the videos, measure the impact it had on sales, do SEO, all of that stuff. That over time became more of a technology-enabled services business where we added actually the video production at scale. And we actually had a content factory where we had a big warehouse and multiple studios and technology-enabled workflows to really produce high volumes of content for Home Depot, Toys R Us, JCPenney, Verizon, thousands of videos a year at scale. At a fraction of what an agency at the time would cost. So we were innovating and doing that and really kind of showed people, this was before you had like mobile devices and creators and social video, where people today take it for granted that you can create video really quickly and fast. And even what we're doing here is very easy to do. Back then it was not, right? You needed all the specialized equipment and all these other things. So we were really kind of pushing the envelope of how do you produce video at scale, low cost, but high quality that brands would want. So I moved to Austin to join them. First as kind of a VP strategy, product management, partnerships. Eventually, as the company kind of changed shape a little bit, I became CEO. The founder was there, Gard, throughout, and he led sales in the last few years. And we grew, at the end of the day, we were at 12 million in revenue. And we sold it in 2018. And it was interesting because there was private equity was starting to consolidate a lot of the companies in this space of creating content at scale for e-commerce, whether it was photography or video. And so we were part of one of the two roll-ups that were happening in the industry at the time.
Wow.
And S3 was actually an investor in that company. So my partners, Charlie and Brian, were on my board, and I had gotten to know them even prior when I was at Sevin Rosen. So when I joined S3, after that, it was just kind of a conversation that had been happening for many years that just kind of came to a natural point where I was able to kind of join the team.
What a magical story. All the stars align all the way, right?
It seems like that in hindsight. I'd say it doesn't feel like that when you're going through it. At that point, it feels like, you're hitting a bump in a road or a detour.
Yeah.
And, Invodo was definitely ups and downs that we had to do. When I became CEO, my first week, I had to, make a big strategic shift and restructure the company and do a lot of layoffs. And so it was
Was that tough?
the most stressful period of my life was those 2 years, 100%.
And that was almost like a different position when you were first get laid off.
Oh, yeah. It was my first time being a CEO. And it was kind of a turnaround situation, right? Where I was kind of given the direction of, okay, well, we have something valuable here, but it's going to be valuable as a service business, not as a SaaS business. So let's make it a profitable business that can then be valued accordingly and then purchased, right? And so that was kind of what I was kind of tasked with doing. And we got there, but it's a challenging thing because you're trying to grow and cut expenses at the same time, and change the strategy and almost the culture of the team and a bunch of other things, all kind of in mid-flight.
It's like you're flying an airplane while fixing at the same time.
A classic, absolutely. But really, it's almost like you're changing the model of the airplane, and going a different direction. So all these other things too. Yeah.
So at the first, 6 months or first year, when you first step into CEO role as a first time, but have a challenging task to do, how do you accomplish that?
Well, I think just having really supportive folks. Brian, who's my partner now, but was on my board, gave me that opportunity. And, I think he always just showed a lot of confidence in me. And then I have to say the people around me too, Gard, who's the founder of Invodo, was kind of always, and Trey, who's our CFO, was always kind of there with me from the beginning. So I always felt like people who I've worked with throughout, and then even people who were at Invodo before who were no longer there that I could consult and reach out. Everyone was always very supportive and wanted it to succeed. And so I just always feel lucky that I had that. I don't think I could do it without the people around me kind of thing.
I feel that more successful people I talk to, the more lucky they think they are. But I really believe that you create your own luck.
Well, I'm sure maybe. I do believe. Yes. I think at some level you are putting yourself in situations where opportunity kind of can manifest a little bit, and some of I'm sure some of it is luck of the draw too, both directions.
That's amazing.
We made mistakes along the way too. I can talk about how we famously turned down an offer for Invodo that was multiple times higher than what we ended up selling at. And there were mistakes along the way.
Really?
Oh, yeah. There's a lot of, so I wouldn't say it was like this kind of great success story. It was more a learning opportunity.
Would you wish to do it differently, given that specific?
Sure. I think in hindsight, absolutely. I wouldn't have got the career experiences, but I think that would have been a better outcome for all the stakeholders at the time.
But is it hard to sell that at the time you were joined as CEO? You turned the entire business around.
This was even before I was CEO.
Oh,
yeah.
Okay.
Yeah. No, we were just getting started. So when we turned it down, it was like, we're just getting started, So at the time it felt very right. So hindsight's 20/20.
Yeah.
And so if I'm being objective about it, I'd say, sure, that would have been the better decision. But you can't go back in time, and there's good things have come out of it afterwards too.
And once Invodo has been successfully acquired, and now you're moving to S3, right?
That's right. Yes.
Wow. So how's that journey? How's that transition? Because I think you are someone have such a rare career experience from corporate to startup to venture in such a short time, right? How's that transition like for
back
you?
and forth.
It's
kept it interesting. I feel I'm always learning because I'm doing something different. Like I said, it's important to me. I'd say it's been, I again feel very fortunate in that I got back into venture at a very opportune time, which was counter to my timing in the past. Like I said, I was like, this maybe the third time's the charm here.
Oh my God,
where I do feel like the timing has been right, where Texas is now really kind of, I think, finally emerging. And I think COVID and other things have helped in terms of accelerating some of these things. But these are trends that have been going on for 10, 20 years where we really, I think Austin and Houston and Dallas collectively have really kind of been these great magnets for talented people to move to the state. And the environment here has been so collaborative and welcoming to entrepreneurs, I believe, that I think it has kind of created a great virtuous cycle and has allowed for more funds to be raised and more dollars to be invested and just more success stories. And, that's how these ecosystems develop. And so it did feel like a couple of years ago we hit escape velocity where like this wasn't like some kind of head fake. This was really happening. And we still have a ways to go, but a lot can happen in 10 years. And one of the things I always like to say is that I believe by 2030, Texas could be the second largest venture market in the country. And I know it sounds kind of crazy today, but going back to when I graduated business school, like I said, New York, LA, they were not even on the map. And now you look at the whatever tens of billions of dollars, whatever that get invested in those markets, and that just happened in a decade's time. And I do feel when you look at the trajectory and you kind of see where the puck is going, Texas definitely has that opportunity to at least be in that tier with them. No one's going to replace Silicon Valley, but I do think we could be Texas and the other important point, I said Texas, not Austin, because I do think Texas is a market collectively. There's enough interaction between all the cities and the DNA of people and their own networks and things like that you can really think of it as a single market. And so I do believe that can happen and will happen. And that's our thesis. As S3, I say our thesis is Texas. That's just one word.
I love it.
So
tell us more about S3 and what excites you most about their investment.
Yeah. So S3. Well, first of all, I mean, people that I know and trust and really respect, are my partners. And so I've known them for a long time and seen what they've done and the way they operate. So that's fundamentally kind of, an important piece. But then also I'm really excited about kind of our the timing, like I said, in Texas right now. In a healthy ecosystem. Like, I don't think it would be good if we were the only big firm in Texas, right? Like, I don't think that's what it used to look like a little bit. And now I think it's important that we have a healthy ecosystem because it helps lift all, kind of all boats. And so, but being part of that has been great. S3 specifically, what I do think makes us really unique is that we have a single limited partner model. So what that means for folks who are not familiar with venture capital, limited partners are the investors in the fund. We are as the folks running the fund are the general partners, and the limited partners are the people who are actually putting up the bulk of the capital, and we are kind of stewards of their capital. And so most VC firms will raise from multiple limited partners. They could be school endowments, foundations, retirement systems, what have you. And may have 10, 20, 100 plus limited partners. And that is a very time-consuming process to raise funds from a lot of people, to manage those relationships, to report back all the regulatory compliance that comes with that. We, on the other hand, are fortunate that we have one multi-billion-dollar family. They're highly philanthropic. Half their wealth has been put into a family foundation because they've signed the Giving Pledge, which is the Bill Gates and others have signed, and so Warren Buffett and then others have signed. So they are they're great partners in that they have been backing us. They're our single investor for the 15 years that the firm has been around. We're on our seventh fund, which is a $250 million fund. And prior to that, we had our Fund 6, which was $200 million. So, kind of managing a good amount of their capital actively right now. And they've just been kind of fantastic to work with in a couple of ways. One is obviously the money that we are investing and the returns are going to just amazing places. A lot of what they do is about helping alleviate social inequities by making sure that every child has an equal opportunity from birth through 8 and allow and surround children with all the services that they need to be able to do that. And they kind of think of themselves as a laboratory for testing out what services work and don't and constantly innovating. Really, it's innovation for philanthropy. So it's really exciting to know that the dollars are going there. But the other really great benefit is a really long-term outlook, right? So we can extend the size and age of our funds over time to meet the needs of the portfolio. So just because I said our Fund 7 is $250 million when we announced it, it could grow to 300, depending on the needs of the fund. That allows us to really be flexible and patient over time. And so we're not running into constraints where we say, oh, sorry, we don't have enough money because the fund is older in its life cycle. We can't support you. Or, oh, we're going to go raise money now. We need you to sell. Because we're not going to have those incentives.
Yeah.
We can be truly patient capital, I think, align with entrepreneurs in a very unique way because of that, which I really appreciate because I don't like it when those kinds of things, the tail wags the dog a little bit.
Yeah, they're rushing it. Yeah.
Yeah. So that's been a fantastic relationship for us and something that really kind of motivates me as being part of this platform.
Wow, what an exciting opportunity.
Yeah.
And do you feel like this is what you always meant to do, Eric?
Oh, I don't know about that. It's hard. I do feel it's something I enjoy day to day.
Yeah.
And I don't, like I said, I'm good bored by it.
Yeah.
Right? It keeps me interested. And I do feel it kind of, but it's hard too. And, going into a down cycle in the economy like we might be facing now, and definitely in the downturn in the tech industry, it's more difficult now than it is like 6 months ago. Right?
Yeah, tell us more about that.
Well, you just have to make the harder decisions, and you kind of and I remind myself because I had to do this at Invodo, which is you had to make some hard decisions and say goodbye to some really amazing people, and went through rifts and other things like that because that's what's the benefit of the company, the long term, right? You're kind of fighting for another day kind of thing sometimes, right? Living to fight for another day. And so, that's happening, I'm sure, across the industry right now. And so there's a lot of challenging conversations at boards around what is the right level of spend given the uncertainty ahead of us? Should we freeze hiring? Should we actually be doing reductions? That is definitely happening. But at the same time, what's really exciting is that we and all the other funds around town, I'd say, all have fresh capital because we just all raised brand new funds about a year ago.
Yeah.
And so that should be that makes me feel very good about the long term prospects here because I think we can ride out a wave. And I really want to make sure that entrepreneurs don't get discouraged by this environment because for those who are just getting started, especially. I would say that it might be a little harder to get going and it's going to be a little harder to raise, sure. But at the same time, you have to just remember that these are cycles.
Yeah.
And, and you can you'll be able to see the light at the end of the tunnel soon,
and
right?
someone who ride through too.
Yeah, I've been through those cycles, right? And I know that when things looked really bad in 08, 09, was actually when, there were still investments being made. And those companies that I remember were just starting off, just reading about in this new publication at the time that was called TechCrunch that was very brand new at the time. Those companies have gone and done amazing things. So these are cycles, and just people have to remember that. And I'm sure most entrepreneurs do because they're thinking about long-term vision and shouldn't get discouraged.
Yeah. So from investor perspective, what are the shifts that you have seen among you and your peers? And also with that, what advice you giving entrepreneurs who are in this downturn environment?
So there's two things. We've definitely slowed down in new investments, but not because we don't want to invest. I want to be very clear about that. It's interesting. We like I said, we have all this capital and we have a team of people ready to go, right? We just hired a bunch of new associates. They're all ready to do the toilet. They're like, oh, let's go. But the fact is most companies were told by their own investors, rightly so, as we did with our investments, that now's probably not a good time to raise. It's
but that's not true.
Well, at the time, what the issue has been the valuation changing, right? Yeah. So, and that's the interesting thing, right? The economy in some ways is actually quite healthy still and growing and all that stuff, inflation aside. But the issue for most companies, if you're going to go raise, is what was your previous valuation? So absolutely, if you have not been priced in this environment, I would say, absolutely go out.
Yeah.
Right now, you have a cap, but a cap is not a valuation. I have to keep reminding people, a cap is just the max. So, you have not actually been priced. And so that gives you a lot of flexibility to raise in this environment and not have to worry about what the old paradigm was. Where folks are in a little bit more challenging situation is where they were valued in the old paradigm and given where multiples are today, and everything floats down from the public markets down, right? Because it's just an accordion. You can kind of see it that way, where the valuations even at the earlier stages are getting compressed. And so if you have raised, say at a 20x multiple, and multiples now are single digits or 10 or whatever it is, what do you do? Right. Well, what you have to do is you have to grow into that valuation. You actually have to keep at growing your revenue to the point where that next round, when you go to new investors, you can at least be at that valuation or higher. Right. And so that means oftentimes going back to your existing investors and raising a little bit more capital, probably at the last price of the round, and keep growing until you can then kind of have an up round. And so that's really what was happening, and it continues to happen in the market for people who have been priced and have investors, to the extent to which they can go back to insiders and do what's called an extension round or something like that to continue to, or bridge, depending on how close they are to that, and then go out. I have been also saying, though, it's good to go raise now because there's your optionality. So we don't know if things are going to be better, worse, or the same 6 months or 12 months now. Now it's not as good as it was, but it's okay, right? You know, and so at some level, I'm like, better now than 6 months from now. So if you're going to raise to get 12 to actually more like 18 to 24 months because we don't know, and then you can feel better. But don't raise to just go raise again in January, or because you're really not kind of solving for the problem of the uncertainty in this period. Does that make sense?
Yeah,
okay.
Definitely. Yeah, no, thank you for that.
Yeah. It's a little bit nuanced, and it depends on every company where they are, but that's generally the advice we've been giving.
Brilliant. And earlier you speak about, in the next decade, you're actually very optimistic about Texas market, about the investment environment.
Years. Yeah.
What do you see in the next, 5 or 10 years?
Just more of the same. I think what is really exciting about Texas is that it's very diversified.
Yeah.
In terms of where these innovations are happening. I mean, sometimes I look at us and, we're Texas focused, but we're software and med device. I failed to mention that when I talked about us. We're just seed A and B software and a little bit of med device, but primarily B2B software. Well, that's interesting. That's a pretty big set of sectors, but there's so much innovation happening even in sectors that we don't even touch, right? Yeah. Whether it's in energy or biotech or space or CPG. I mean, you just see so much of things that we just don't operate in because we don't know enough to do that, but that are just happening in Texas around us. So I feel good about that, right? It's not. It feels more resilient than ever because you have so many different pockets of innovation in the different cities too, not just in one city. And you have so many different types of investors at all these different stages. Now, I think there are still some gaps. I think there'd be nice to see a little bit more earlier stage, like pre-seed, seed.
Yeah.
There used to be more fund activity there than there is today, but generally speaking, I think it's healthier than it's ever been. And so I just think because of that diversity and that almost like decentralization of it, if that makes sense, it'll be just planted a lot of seeds and a lot of flowers will kind of bloom.
Do you have any specific industry or sector you're most excited about? Or you think
that's my point. No, I don't. I mean, obviously every city or space has some kind of strengths, right? Like if you go to Houston and where I grew up, right, there are definitely some key strengths where they could lead the world in certain areas, right? Because of their heritage, right? Whether that's an energy transition, and people love to talk about hydrogen there, or it could be around, the logistics and all the port of Houston, space, obviously, and then the med center has so much to offer. And so there's some natural kind of strengths in that city. Austin has had lineage that goes all the way back to semiconductors, but more recently, it then became enterprise software. But then we have a lot of consumer companies that have been super successful. So I just think it's super diversified in Austin. Yeah. And then Dallas has its own, again, I lived there as well. So, and has all these Fortune 500 companies and a strong history around retail and financial services and other things. And so, there's a lot to love, across all of that for sure.
That's amazing.
Yeah.
And Eric, since you have multiple roles as a startup and also investor both sides, I'm curious today as an investor, how do you like to be approached when entrepreneurs want to partner with a firm like S3?
I think we all collectively love meeting entrepreneurs, even if they're a stage or two early for us. I think the most important thing, though, is for entrepreneurs to approach that conversation knowing where we, like when we invest and who we are, right? So, like, kind of doing a little bit of their homework around that. But, and so going into those conversations with the right expectations, right? So we reach out to entrepreneurs early and say to them, because we even do a little bit of outbound where we'll say, hey, you're an interesting person innovating in an interesting space. We would love to meet you. We know you're early. Would you like to have a conversation? And most folks say yes, and we do that and start that. And so happy to do that all day long, as long as people kind of have that understanding that it's about building that relationship. And we can hopefully be helpful, connect them to certain people along the journey. But just kind of understanding where we start and end, and just kind of entering those conversations.
Yeah. So with that, would you appreciate entrepreneurs reaching out to you through co-email or co-LinkedIn message, or specifically, how do they? If they think they are the good fit?
Sure. I mean, I think one of the things I take pride in is we're very accessible as a firm, and we've actually staffed up our team to be able to do that. And we're not at the point where we feel overwhelmed in doing that. But so, I mean, we are pretty responsive even to cold outreaches, I would say. We meet people at conferences, and I mean we've invested in pretty much every kind of way, but referrals tend to still be the strongest.
Okay.
And we actually do a lot of statistical analysis on our pipeline and look at that. And over the last few years, it's very clear that referrals from people we know tend to go furthest in our pipeline. In terms of the stages that we have for diligence and stuff like that. So I think anything that is referred to us, we will come in with kind of maybe a mindset that might be slightly biased or different because of that. But generally speaking, we do a lot of first calls that are cold in both directions. We reach out, like I said, also people come to us. So we do that all day long. I mean, I probably do at least 5 a week.
Wow.
Just do it with our associates and all that they get invited to. Yeah. Absolutely.
Yeah. So, for entrepreneurs who are listening, now picking the ears, what type of portfolio company that may be one of your favorite, or what type you're looking for?
So for us, one thing to understand, and this actually goes back to your first question about what should entrepreneurs know about when doing their homework and knowing where we invest in terms of sectors and stage is important, but it's also important to understand that the larger a fund gets, the kinds of outcomes that they need to be successful change. So this is just a little bit of understanding how venture capital economics work, but we're investing in early stages of businesses, right? C through B. And the failure rates of those businesses are very high, right? So we assume that we're going to lose money, on maybe up to half of our companies, where we lose all or most of the capital. So it's really the other half that starts to kind of contribute to the return. First of all, they have to make up for the losses of the previous.
And the return.
And then they have to generate the return. And folks who don't really kind of study this closely maybe are not aware, but like the top tier firms are like 2x, 3x funds, right? They actually triple the money that that are committed. So if I have a $200 million fund, I'm returning $600 million to my investors to be in the top tier, okay? Top quartile or whatever. So think about the math for that. That means I actually have to have a handful of companies that generate almost all of the fund initially, and then some maybe. So it might be actually only 2 or 3 or even one company that could be like a 10x or 20x return from that initial investment, and then maybe 5x on the follow-on investments that really drive the
3x total.
If you want to be top tier, right? Like if you look at those top performing funds, they all have 1 or 2 of these companies that were probably unicorns, right? They were valued at $1 billion, and that allowed for this kind of return math to work. Well, to be valued at hundreds of millions of dollars or $1 billion at exit, which is important to us to be a success, the markets that you operate in have to be billion or multi-billion dollar markets eventually, right? Just because of that's the only reason people will value that way. Either when you get bought or an IPO, the only reason the markets will value you more is because there's room to grow, right?
Right.
And there's upside. So that's a long way of saying that we need to have big markets, right? So if you can't really articulate how your market is going to be very large over time.
Very large for you.
Yeah, well, $1 billion plus market in the U.S., kind of maybe multi-billion globally is ideal. I mean, there are always exceptions. And the hard thing about that as a VC and as an entrepreneur is it doesn't mean that the market is that size today. Yeah. It just could grow to that size also, right? And how you define a market is complicated as well, especially if you're a new category and there isn't really, it's not defined. So some of that is about being able to tell a story and a narrative and have a thesis, some logic sequence, how you get there. And then some data today that shows, if you can tell me that, okay, I'm eventually going to be $1 billion, but today with the current segment that I serve at the current price point, it's hundreds of millions of dollars. But I can see how then it can get to $1 billion or plus, then that helps. If you're showing me that, the segment that I serve today and my price point, that's a $100 million market. That's really hard to go from 100 million to $1 billion. It's a little bit more mental gymnastics for me to get there.
Yeah.
So that is something to just kind of for folks to think about. And I always say to people, doesn't mean that you should change your business. It just means you should just think about your financing strategy differently. Yeah. So every company is not made for venture and shouldn't be.
Yeah.
Right. And I always feel sorry for in some ways or try to kind of help guide entrepreneurs that are thinking that they need venture capital when maybe their business doesn't actually need it and they're kind of hitting a wall constantly. When really they can build. They could either they could maybe raise money from friends and family or angel investors or smaller seed funds, but and do quite well. But as long as everyone around the table understands that this is really a business that could sell for $30 million and we'd all be happy, right? If I did that, I'm not happy at the $30 million exit, right? So, but there are if you're raising from people that are okay with that return and you don't raise too much. Then that can be very lucrative for everyone. Or you might just say, okay, well, actually, it's okay if I am a technology-enabled services business that cash flows. I know people who have been fantastically wealthy, having fast-growing services businesses that cash flow, or they're able to sell eventually. I mean, some of my good friends have made tens of millions of dollars this way. Never raised a dime, or maybe at the very end they did something with private equity, but they didn't have to raise in those early days. And that was, so it's let the market and let the customers direct what the right product is and what the right path is, and then use the right financing mechanism, if that makes sense. Don't let the cart get before the horse and people just default to, I need to raise venture capital, even though they're not really understanding what the business is that they're building.
Yeah, that's very,
Does that
very
make
helpful.
Sense?
Yeah, no, thank you so much, Ari, especially for a lot of entrepreneurs, maybe the first time in this world and understanding, maybe have a limited understanding about money or capital, where the source of it and where stage they are. So that's very
and
helpful.
the nature of their business, right?
Yeah.
If your model is really one where you could maybe have some services and build a great business, and that's necessary because the product needs those services, and that's the way to go to market, and that's what customers want. That's just what it is. Or you can't force it to look like what VCs want it to look like, right?
Yes.
The market wins always.
Always listen to customers.
Yeah, the customer, exactly. Yeah.
Amazing. Wow, Eric, you come to a long journey. Yes. I'm curious, looking back, Eric, in your own personal perspective, would you change anything? Is everything you want, everything come this moment?
Well, I would say I definitely feel lucky, and I feel fortunate to kind of be here at this moment, have a healthy, loving family, and all that stuff. And so, I mean, I feel very happy and content. I guess you could say that. I mean, but I mean, we all want more. We always want to grow and are ambitious. But
so, what does success means for you? And if that, are you successful?
I am not successful yet as a venture capitalist because I have not generated returns as a VC because I'm too early in my journey, right? Like I do have that. I have that. I hopefully have that kind of self-awareness and humbleness around that. It's really the people. You have to almost be in venture for a decade or more, or have some very early wins, which again is something that could be, just kind of timing and other things, come into that. But for the most part, one of the kind of the riskier, more challenging things about a career in venture capital, because I get asked about careers in venture capital a lot, is that you can go 10 years into it until you really find out if you're any good at it, or you're going to have the next 10 years are going to be there or not. Right? Because it almost takes about a decade to really be able to kind of take stock of your quote portfolio, right? Because I just mentioned, like, if you think about the venture math, right? If 1 in 10 or 2 in 10 are the real winners, well, that means you have to have enough time to have made that many investments and then see them pan out. And sometimes they don't really pan out for many years. And so it's really hard to kind of assess someone, at least where I am in my career. In
you don't have real-time
I'm only
feedback.
4 years. I mean, you do. I mean, so you have a little bit of that, and you can see some. But oftentimes, the ones that are going to go out of business go out first before the winners emerge, too. There's a J curve that happens in venture capital and other things. So it's a little bit hard, and that is a little bit kind of nerve-wracking a little bit. You're like, well, hoping I'm doing the right things. But you really won't know as a VC, until you're kind of probably getting closer to year 10 in terms of because even if you have companies that are being marked up, so I would say a lot of VCs that were early think they're good until now because they've got a lot of paper markups and things are looking good. But if the revenues really aren't there to support that and the growth isn't there, and then at the end of the day, all that investors really care about is that you're returning the capital. So the real mark of venture capital is distributed funds. Now, I'm very proud of the fact that our last fund, we're doing very well on that measure specifically and have actually returned capital in a very powerful way. And so I think that is really what that matters at the end of the day. And you don't see that. It can be a decade before you see that.
On average, before pandemic, it take 11 years for average company from conceiving to a meaningful asset.
Especially public exits, especially.
Totally.
And those are the ones that drive a lot of the returns to the point I was making, right? So there's paper and then there's the reality of it.
Completely understand. But now you're 4 years in this, right?
Yeah, it's still early.
So early.
That's early, just getting started.
At this moment, do you see this is what you wanted to do?
I think so. Yeah, absolutely. No, I know so. I know so, I'd say. I mean, definitely what I'm enjoying. It's more about can I keep it going? Like, can we keep it going? And can it, but sure. It's fantastic. I will say it's harder than people think. I think people think venture capital is sexy.
Yeah.
Well, because it's just...
well, tell us that, because everyone thinks it's sexy.
Yeah, I think it's sexy and easy, or like a cush job or something. I mean, there are some definitely nice parts about it, and you definitely control your own. To some extent, you can control your schedule in ways that you might not otherwise. But at the same time, you're fighting fires a lot, right? Because there's things happening in the portfolio, so you're not really in control of that, right? I'll tell you, like, everyone in our team has stories of where their family trips have been ruined because they are like on the phone the whole time with something happening. It's like like Murphy's Law of something happening. So
it can happen.
It does happen, and so but I mean, a lot of venture capital, actually, a lot of the time you spend in venture capital is not on the successes, because the successes, almost by definition, have the right teams in place.
Yeah,
they have the right teams. They can do it themselves. They don't need you.
Yeah.
It's the ones that are struggling or are having some other, kind of extraordinary dynamic that you're dealing with.
So you're spending time actually not helping the winning company.
That's one of the things that if you talk to VCs, it's like, how do you spend more time helping those be even more successful? And you do. You still help. I mean, you're still on the board and you're still doing things, but you inevitably get sucked into or pulled into the ones that need more help. And it's not necessarily winning or losing. It's also stage. So what you find is actually the ones that you have the least money in and the seeds are the ones that actually consume more of the time disproportionately than the later stage ones.
Interesting.
It's a weird thing. And you just have to find the right balance of doing a little bit of everything. But it does, again, especially in the environment now, some of the stuff is less of the sexy stuff.
Yeah. Wow, that's I would never think about that. Yeah. That's brilliant.
And then sometimes, it's hard to say no most of the time also.
Is it the hardest thing?
Oh, it's very hard. It's hard. Especially when people are building amazing things and it's just not a fit. I think no doesn't mean no, it's a bad business. No, it's just not a fit for us, right? Which is hard for people. It's like when a breakup happens.
You're great.
It's me, not you kind of thing. But there's truth to that.
Yeah, completely.
Oftentimes, like there's certain stages, sectors, strategies that
Yeah.
comfort level that we have in certain things that and anyone who's raised money knows that you get one or two people to say yes out of 20, right, or 30 or 40 or whatever it is. So that's just part of it.
So for entrepreneurs who are listening, now thinking they are the fit in their mind, right? What advice that you have for them as they are raising capital in this environment, maybe approaching S3 if it's the right fit or any other investment fund? What would you kind of share with her?
This will sound self-serving, but I do think it's a fair thing, which is to really kind of reset your expectations in terms of what round size and valuations are, and really go back. I'm not saying to go back 10 years, just go back 3 or 4 years, right? Like, I mean, we had such an extraordinary peak there that, I think some people are thinking that it's going to somehow return. It'll never return, not never, but it's not anytime soon, going to return to that. And so to just kind of reset their expectations, and that might mean just putting together kind of their plans that are more capital efficient and get hitting like milestones in a different way, and just rethinking kind of what they were doing. But to say I'm going to go raise $5 to $10 million for my seed could be done before, probably unlikely to do in Texas market at least. And so those are the kinds of things where there's a little bit of that reset that's happening. And what is also kind of frozen the market a little bit is that bid-ask spread that's happening, right? Some people are kind of holding on to some of that, and investors are thinking here, and eventually I'm sure there'll be some kind of meeting. But that is something that I think if at the end of the day you want to get back to building your business and operate, and really creating value, kind of just get going. And that sets you up better for the next round. The reason we're doing that is not it's not like completely like I wouldn't say we're trying to like take advantage of the situation and be like, oh, we can go as low as we can go type thing. It's really about, well, we eventually have to raise the next round from other people. And if you can't raise that next round because of your valuation, you're just setting yourself up for problems, right? So you have to, we're all thinking about that. We're all aligned at that point. And so it's about what makes sense now given what you're going to achieve with this money for the next round. And so I think, it's collectively the right thing to do.
No, thank you for sharing that, because I think other entrepreneurs are not thinking about math at that stage. They're thinking about, well, who's going to give me a check without thinking the big picture. So thank you.
Who's giving me a check, or like, how do I part ways with the least amount of my business, which is fair. I mean, of course, everyone, if I'm on that side, if I'm on the side, everyone wants to maximize. And I'm not saying that everyone shouldn't push for some, but the range, where the range is, has shifted. So just fine if you want to maximize within that range, but don't try to, kind of be in a totally different range. That's going to just hurt you, I think, in this environment. And then just being, kind of just raising a little bit more than you need for your plan, because we just don't know, what the next 6 to 12 months looks like. It could look great. It could look really tough, and it could take you a lot longer to hit those milestones.
Brilliant. And Eric, wow, you come a long journey. Truly, I think it's admirable from, corporate to startup to venture capital. And I think everything you do, you humbly said that you're always here to learn, but I feel like you have such a mind for innovation, to bring the best, forward. And I think that's truly what brought you to who you are today. I'm curious, for you, what do you think is your superpower, Eric?
I think it is this like commitment to like lifelong learning. I really just natural curiosity. I've always been that way since I was a kid, I think. And so I just love to read and learn from people. So I think that is what that kind of feeds on itself, because I enjoy it, and that's helped me, I think, be successful in this
environment. What do you want to learn next?
Well, there's so much going on. I mean, obviously everyone's talking about all like this everything around AI. And I've made some investments in AI already, but it's something that it's one of those moments where you're like, oh gosh, I need to go learn a whole other kind of technology stack, really, right? And really think through like, what does this mean, and is it gonna, how profound is it? How much is it overhyped or not? Is it going to really, does it create opportunities for new startups, or does it really, are these going to be features of existing products? Like, it's really it's been really intellectually fun. Just not for me, but a lot of people on my team we've really enjoyed, I think, having the opportunity to kind of, this is another wave. I mean, because I've lived through these waves, like when mobile happened and social happened. And even prior to that, when I was just graduating from college, it was the internet, right? And a lot of discussion around, are we going to do peer-to-peer, or is it going to be, I mean, there's all this stuff that came kind of full circle a little bit with crypto and other things, but, it's just kind of a new paradigm almost that we might be entering or not. Who knows?
You does see the entire, spectrum from mobile, from internet, from all that we take granted today, but you see the fully unfold in the time that you're in technology world.
Yeah, I mean, even if I go back all the way to when I was a child, especially, for sure, seeing a lot of the information technology stuff happen, right? And so that's been fun to see and see the patterns that emerge from that, and how industries they do follow certain kind of cycles and patterns around these technologies. And so we're just entering this kind of mania phase around some of this stuff, which happens all the time, right? Yeah. It's happened a few times before. And so it's exciting time, but it's also a very confusing time as well.
Yeah.
But that's what makes it interesting.
That's what right? We got all figured out.
Yeah, if you figure it's not interesting, it's not fun. Yeah.
Well, people say, learners are leaders, and you definitely demonstrate that, Eric.
Thank you. Thanks.
And, with today we share so much about your journey, your amazing insight. Anything else you want to share with entrepreneurs that I have not asked?
I'll just repeat what I said a little bit earlier, is to just remember this is a cycle and not get discouraged by it.
Yeah.
As we talked about, seen a few of these. And I think especially for younger entrepreneurs who oftentimes, can be the most innovative, they may get really spooked by this. I do remember being laid off when the dot-com bubble burst. And it's very disorienting because you're told certain things I made more my first year out of school than I did 5 years later because of how crazy the peak was, right? Wow. And so it's kind of like a humbling thing when you're the belle of the ball, everyone's trying to recruit you, they're flying you around.
You're so excited.
Yeah, you're excited. And then suddenly, so I can have empathy for folks who are younger right now who are seeing some of this and maybe feeling down on that and just reminding them that these are cycles. Now, we don't know if it's a V-shaped or U-shaped or whatever it is, but they're young, so they have a lot of time to recover, right? So just remember that. I think for younger people in particular, I think the people who've been around the block, they get it, they've seen it, they understand that they have that long-term perspective. I feel sometimes younger folks can get a little bit more nervous or for some entrepreneurs even not realize that, even if they are a little bit further in their careers, maybe have not seen these cycles in the entrepreneur world as much. So just stay focused, positive, and keep building what you're building and focus on the tightest focus on your core customer and the core pain, and everything else will kind of fall into place, I think.
That's a brilliant advice. Thank you so much,
sure.
Eric. I really believe that good project always got funded.
Yes,
and
absolutely.
Especially, there's a big environment that might not be most encouraging, but the timing gonna come.
Yes.
But truly, thank you so much, Eric. Wow, I'm so honored to see how your curiosity helped you unfold the entire career trajectory from truly the corporate to startup to VC, and every step along the way, you are just not only so curious, but you're just so humble to serve and to drive the innovation forward, which is just so brilliant. And I think the fact that you've been through the two biggest bubble in the history and really almost help you even become better leader today. You have this not only brilliant, but you're just so humbly, helping others, and that willingness to help, that passion, that compassion really set you apart.
Oh, thank you.
And that's why entrepreneurs really love to come to you.
Oh, well, thanks.
Truly.
Appreciate it. Thank you.
Well, thank you, Eric, for coming today.
Thank you for the opportunity.
Yeah.
I really enjoyed it.
Amazing. Well, thank you so much, everyone, for joining today. I hope you enjoyed the conversation as much as I do. And I cannot wait to see you all next week. Bye, guys.